Hello guys, welcome back to the channel. Here in this video we are going to discuss about range reversals. To make you understand this video better, we are going to divide this video into three parts. First one would be what is range, why it matters for an intraday trader. Second one, we'll take two real life examples and how this range reversal and range continuation looks like, and how can we take advantage of these range reversals. This will be the second part. And third part, we are going into the different types of ranges and how this range types is going to impact the profit booking for a trader. So let's get back to the first part. So what is range? It is nothing but the distance between the lowest point and highest point. Suppose if the prices starts at some point 100 and if the prices goes up to 110 rupees by the end of the day, the range is 10 points. For intraday trading, we will focus primarily on first 1 hour range. Why only first 1 hour? Why not take 2 hours? Why not take 15 minutes? Or why not take 30 minutes? You might have observed most of the time intraday, the first 1 hour is where you will see much of volatility. In the first 5 minutes, the volatility will be very high and slowly it starts decreasing. So by the end of first 1 hour, 70 to 80% of the volatility will decrease. The reason is that the main big traders, whoever have overnight change in their perceptions of bullishness or bearishness, they try to exit in the first 30 minutes and 1 hour most of the time. So once they get exited, the volatility settles and the range itself establishes. So suppose, let's say a trader comes into the market in the morning. So he had a bullish view, he had bought some stocks. So the prices started from 100 rupees and it ended at 110 rupees. So this is the first 1 hour range. So here the range itself is 10 points. The average price of this institutional trader will be somewhere within these 10 points. So if the prices stays just, let's say if the prices stays within these 10 points and it doesn't move anywhere, will he be able to take profits? I don't think so. So if this person want to take profits, so let's say he had 1 lakh quantity bought in between this and his average price is 105 rupees, the prices has to move far away from this 10 point range, and it has to sustain those levels. Even if the prices goes up and immediately comes back, he may not be able to exit all the 1 lakh quantity which he had bought in the first 1 hour. So the prices has to sustain above the first 1 hour. Only then he will be able to make profit, or he might exit with little profits. So suppose if the prices, let's say it doesn't go beyond the first 1 hour, whole day the prices is spending around this point. So obviously this person, he is a intraday trader. Suppose he is a market maker, intraday trader, he will be forced to exit. So the prices will move on the other side of the range. This is what exactly we are going to discuss by taking two examples in the next part. Now we are going into the second part. So in this second part, we will discuss about what is the range reversal and what is range continuation. Both of these two, range reversal and range extension, is going to give us good opportunities in intraday. First, I have taken HCL Tech as example and focus on this area, guys. This is the first 1 hour, whatever you are looking at, on Tuesday 14th. So what happened? Somewhere the prices tried to extend. So there was a strong selling in the first 1 hour, indicated by how the price is making lower lows and how the price is closing at the lows. So, but what happened later after 1 hour? The prices went a little down and then immediately closed inside the 1 hour. So what this is telling is the sellers, whoever tried to extend the prices below the first 1 hour low, they are failing here. So supposedly if the sellers would have been successful, the prices should have closed below the first 1 hour. That has not happened. So this says that the sellers might be unwinding. And later what happened here is the prices have broken the other side of the first 1 hour. So this indicates that the sellers, whoever have sold, they might have unwind the positions. Now again remember this, once the other side of the first 1 hour is broken, that says that the buyers might be taking control. So most of the time, 70 to 80% of the time, what I have observed is you will see the prices extending more or less equal to the first 1 hour range of that day. So here let's say if this range is of 10 points, and you will see a range extension on next day or in the next 3 days, 100% of this 1 hour. So you will see another minimum 10 points, and this is the first target, another 10 points you will see further range extension. So this we call it as range reversal. And let's take another example of what is range continuation. Look at this candle. What happened here? This is the first 1 hour. I mean the 1 hour itself is within the first 30 minutes. So we can call this as first 1 hour range. And what happened somewhere later, 3 hours later, the prices have broken the first 1 hour high. And what happened? The prices continuously is making higher highs. So what this tells you, the low is not breaking. What this tells you is that sellers are failing completely. So once the sellers are failing, buyers take control of the market, and the prices makes higher high instead of going downside. So that is what happened here. And look at this example. I have taken here Wednesday 29th example, and here the first 1 hour low has been broken in the third candle, but immediately it closed inside, but nowhere the other side of the first 1 hour has been broken. So this indicates that the sellers are not unwinding. So the prices have not gone to the other side of the first 1 hour high. The prices have extended equal to the first 1 hour. So if this first 1 hour is, let's say, 10 points, another minimum 10 points range extension will be there. Another second target 200% range extension will be there, giving you 1:2 risk to reward ratio. This is with range reversals and range extension. Now in the third part, we are going to understand types of ranges and how this can impact our profit taking in intraday. So let's take one example. There are 3 types of ranges. First, narrow range, medium range, and high ranges. How do we even know that whether the first 1 hour is a narrow range or medium range or high range? So for that, we are taking another example, HDFC Bank here. So I am going for ATR. ATR is nothing but it tells you how much average the price is moving, HDFC Bank daily. So if you look at the daily chart, shows that it is moving somewhere around 30 points on an average. Market is moving. Here we will also take another example. This is the first 1 hour. So the price started at 1612 and it all the way went up to 1646. So the first 1 hour range itself is somewhere around 33 points. What does this tell you is the whole day movement that has to happen, that has happened in the first 1 hour. The first 1 hour range itself is high, we can call it. So the probability of the further markets going upside, it decreases exponentially. That's what happened here. Whole day the markets are sideways market, and on the next day the first 1 hour low has been broken and the prices started going downside, right? Now let's take another example where we have a narrow range. So look at this. Here the prices have moved somewhere around just 10 points. So out of 25 to 30 points daily movement of HDFC, it has moved only 10 points. So you still have 15 to 30 points cushion where the prices might further trend. This narrow kind of range days is where you will see trending markets. So sometimes what happens is you will see medium kind of range. So in medium kind of range, you have to take whole context into consideration. Whether the previous day there is a strong trend, whether the market is in consolidation. Like this, you have to understand the context. Before winding up, my only request to you is go through as many examples as possible. So this range reversals has a accuracy of anywhere between 70 to 80% based on the market. In a sideways market, it works much better, and in a trending market, it's better to look for trends towards the main trend. So if the main trend is up, you look for main trend reversals. This is with range reversal, guys. I hope I have added some value to your trading. Don't forget to subscribe to the channel. Thank you. Have a nice day.